Most student loan borrowers have never heard of the July 1st, 2026 deadline, but that date quietly determines which repayment plans some borrowers can use, especially if their loans are ever consolidated. I'm Anthony Perano. I'm a federal court attorney, and I'm going to take a few minutes to discuss this with you. The problem is this. Many borrowers only learn about the rule after their options have already changed. So let's slow it down a bit and explain what July 1st, 2026 actually means in federal student loan law. Because once you understand the rule, the system becomes a lot easier to navigate. So first, July 2026 is a transition date. It's written into the federal student loan regulations. That date marks the point where the Department of Education separates the current repayment system from the new repayment system, the new framework Congress created for future loans. In other words, the government had to draw a line somewhere between the old rules and the new rules, and that line is July 1st, 2026. So depending on when a loan was issued or consolidated, borrowers may fall into different repayment systems. Second, let's talk about why consolidation matters, because this is where things start to get a little confusing. Some federal loans cannot access certain repayment plans unless they're consolidated first, such as Parent Plus loans, certain older federal loans, or loans that are not already direct loans. And when borrowers consolidate those loans, the government creates a direct consolidation loan. And the date that consolidation loan is issued can affect which repayment options are available. So timing sometimes matters, not because everyone must act immediately, but because the system uses July 1st, 2026 as a dividing line between repayment frameworks. And third, what does this mean in real life? For many borrowers with student direct loans, nothing dramatic changes overnight, but the borrowers with certain loan structures, especially older loans or Parent Plus loans, consolidation can eventually become part of their repayment strategy. And what happens, when that happens, the timing rules tied to July 1st, 2026 can affect which repayment programs remain available to them. So this is why you sometimes hear lawyers or financial professionals discussing the 2026 transition rule. It's not about panic or rushing. It's about understanding how the federal system organizes repayment eligibility. Next, let's talk about why the rule confuses so many borrowers, because the federal student loan system is complicated. Several generations of loan programs exist at the same time. Borrowers today may have loans from older federal programs, direct loans, consolidation loans, multiple repayment plans created by Congress over time. And when the laws change, the Department of Education usually creates transition rules, so the system doesn't break. So July 1st, 2026 is simply one of those transition points. It separates borrowers who fall under the current repayment structure from borrowers whose loans are issued after the new framework begins. So what's the key takeaway here? Well, the important thing to understand is that July 1st, 2026 is not a universal deadline for every borrower. Instead, it's a structural rule inside the federal loan system, and depending on your loan type and the consolidation history, that date could affect which repayment plans you're allowed to use. That's why borrowers should always understand how their loans are structured before making major repayment decisions. Because with federal student loans, small timing details can affect very, very large financial outcomes. I'm Anthony Perano. I'm a federal court attorney, national student loan advisor with 35 years experience. Stay with me for honest, truthful, and accurate advice based strictly on the law. And I'll see you soon in the next video.